Peter, what's a prediction of the development of technologies in the wealth management space in Asia Pacific?
Well, Christina, I think when we're looking at the way that technology is evolving, I think we have to consider the way the market and the pressures that exist on the market today. And I think there are three key factors here. One is the pressure of regulatory compliance, which really accounts for a very large proportion of the bank's costs and their focus. The second is the constant demand from customers for new products in terms of street-side development. And the third aspect is the way those products can be quickly disseminated into the marketplace. And what this requires is the capability to deliver and effectively sell those products through digital channels. And those in turn are putting pressure on institutions to better integrate the capabilities that they've got from a front-to-back basis in terms of implementing regulatory compliance. Also having highly flexible systems which allow them to create new products quickly. And thirdly, having the appropriate digital channels which allow them to sell client-appropriate products. And by that, I mean the capability to understand their customers' requirements as individuals. The era of being able to offer all products to all customers is over. Customers now want very specific propositions delivered to them which are personalised. And the only way banks can do that is really appropriately through the analysis of big data. So I think that's another potential trend that we're seeing emerging in the region is the evaluation of data in order to provide customer appropriate propositions. And we've seen that recently through the announcement between IBM and Development Bank of Singapore.
In China particularly, how do you see the demand for wealth management technologies?
China is a really exciting space for wealth management. It's obviously one of the largest markets in the region in terms of growth potential. However, the onshore market within China is very different from the offshore market for wealth management being offered in Hong Kong and Singapore, for instance. And also when we look at the demographics and the characteristics of wealth management in China, the way that individuals approach the services that are offered is quite different as well. In China, most of the wealth is being driven by first-generation entrepreneurs who wish to be able to manage their wealth in a more proactive way themselves. So far more of a self-service offering is actually required. I think when we look at the way that wealth management is going to evolve in China, and it is an evolving market, we can see at the moment that the wealth management institutions and banks are somewhat limited in the types of asset classes that they can actually offer in combination to their clients. I believe that that's probably going to change.
So what's Avaloq's strategy breaking into the China market?
Okay, I mean, if we look at the way that Avaloq is approaching the China market, Avaloq has been in Asia Pacific now since 2008 and already has 14 banks as their customers, both in Singapore and in Hong Kong. The first part of our strategy for China is to work through those existing customers into the Chinese market. Many of those banks have got representation in Shanghai and in Beijing. The other way that we're working in terms of entering the Chinese banking market space is through deals that we've done, such as the bank with the Agricultural Bank of China that we've just announced, working with institutions from China who are working in offshore markets and other centres. We're also talking to Chinese banks and looking at ways in which the Avaloq product can actually be tailored to the very specific requirements within China. We recognise at the moment that the capabilities of those institutions to offer a full service of banking products is not really there yet due to regulatory restrictions. But the way that the Avaloq proposition is actually put together allows banks to take it on a progressive development approach whereby they can take a small amount of the system today, and as the market deregulates they'll be able to expand that into a wider product offering over time.
So would you please share us more about your contracts with Agricultural Bank of China and HSBC?
Yes. The Agricultural Bank of China is one of China's largest banks. It has over 100 million customers. The bank estimates that about 1% of those, about 1 million or so, will be interested in their wealth management service proposition. And clearly that's going to be balanced between services offered onshore within China and services being offered offshore through places like their branch in Hong Kong that has recently opened up. It's an exciting time for the Agricultural Bank of China. They've announced to the market that they've gone live with Avaloq at the same time that HSBC has recently announced that they have signed up with Avaloq on a global basis. So we've now got two of the top competitors for wealth management services in the Asia-Pacific region, both using the state-of-the-art Avaloq system, which really raises the bar in terms of competitive pressure on a lot of the other market players who really need to watch out.